Yo, hey, sorry about that. Boy, there was a real glitch in the matrix this morning. Google and YouTube and all its other properties, it gets weird when you got like 7 different Gmails or 20 different Gmails and it just wouldn't open the right profile. So anyways, I'm glad I'm here. I'm glad you're here. Let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. Thank you for being here. Please ask questions. I will do my best to help. In the description below, you will find other resources besides these live streams that I do every single day. One of them is a link to Amazon.com. It's to my book, Strategic and Tactical Forex Trading. There's a link to free training courses on YouTube at youtube.com/fxbootcamp, youtube.com/tradersway. Of course, all the videos, thousands of videos here at youtube.com/Forex.Today. In the link in the description below, in the description below, you'll also find a link to fxbootcamp.com, a premium education community. It starts with 65 hours, soon to be about 80 hours of premium Forex training, things like day trading, swing trading, monetary policy, macroeconomics, trader psychology, all that kind of stuff's in there, $88 a year. And of course, a link to tradersway.com, whom I believe to be a trustworthy, ethical foreign exchange broker. We all need brokers. So why don't you start by developing the relationship? You open up a demo account, you play some trades, and you'll say, oh my gosh, Trader's Way is quite fast. Trader's Way pays high swaps. Trader's Way has narrow spreads. This is epic. It's clean. It's organized. It's easy to use. Click the link or don't click the link. Tradersway.com, open up a demo account. And here he is, and here we shall be. And I've been practicing a different technique on this account, and I accidentally closed. I accidentally closed a good trade. So anyways, I was short euro dollar, and about 6 seconds ago, or 6 minutes ago, as I was monkeying around trying to figure things out, I went over and I closed a short trade. What can I say? Oops. So anyways, but we are at parity, and that's interesting, isn't it? So why don't we start with euro dollar? I'll drag this across. I'll drag this across. All that volatility yesterday was for naught. We just went back doing what we were doing, and there's a lesson in that. Okay? So in effect, nothing happened with CPI. Except it went way up, it went way down, it went way, way, way up, and then it went way, 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 way down, and now we're right back to where we were. Maybe scalpers made a lot of money there. I feel like a lot of amateur traders lost money in there. And really, if you look out at the bigger picture, all we did is retest the 4-hour. Or if you want, we retested the daily 5 and continue mission. Okay, not too complicated, unless you made it complicated. But anyways, here we are once again testing parity. I remember the last time we were at parity, I was a Forex trader. Somebody told me that was 2002. I think I heard it on the news. And I remember that minute because I was buying euro dollar back then at 88 cents, 90 cents, and went all the way up to parity. And I thought, wow, a euro is worth more than a dollar. How interesting is that? And here we are. After 20 years, we're right back. Okay? 20 years later, we're right back to where we were. So very interesting. And the big question is there rationale for it to continue? And I would argue yes. It can continue down. Okay. So, cool. So we're at that moment of truth, of course, and it's going to come down to your opinion. Right now, okay, we're riding. Okay, we're riding the moving averages. 4 hour, 1 hour, daily. It's all good. See, look, daily 5 EMA in play. 4 hour EMA in play. 1 hour EMA in play. Denise says, hey, I'm surprised there hasn't been a parity bounce. Well, there has been several. But the thing is, there's a fundamental reason that this can continue down. Okay? Doesn't mean it will, of course, and maybe we do get a giant bounce. And to me, that would be very psychological. That would be very maybe algo driven, but ultimately it really can. If the market wants to take it down, it really, really has rationale to do so. Now, I can tell you some big banks have been betting long because of parity, but other banks are short. How do I know that? Shh. Okay. Don't tell anybody. All right. Okay. Aussie dollar coming around. Okay. In the day trading group, we've been talking about how that news was so much noise and that I figured continuity would remain. All the fundamentals are still there. CPI hasn't changed anything. Not yet, anyways. I think the next one will be different than this last one. But nonetheless, the Fed is going to raise interest rates, and they're probably going to raise interest rates big. And now people are thinking maybe even bigger. Hey, there was a time when it was 50 basis points. And the Fed said they were not even thinking 75, and then they raised 75, and so now we're all thinking 75, and now some people are thinking a full percentage point, and all that needs to get priced in. Or you could just argue total global economic contraction, risk off. China's in trouble again with COVID. You can see the import-export data, which makes Australia in trouble. When there's a global contraction, there's a shortage in US dollars. Remember, it's a reserve currency. Central banks need this stuff. And if Americans are not importing as much as they would normally import, then there is a shortage of US dollars. Think of it that way. Why is that? Well, when Americans buy TVs, and buy cell phones, and buy cars, whether it's Asian cars or European cars, they're exporting their US dollar, increasing the supply globally. Well, we're not really doing that to the normal level. Uh-oh, SpaghettiOs. There's a shortage. When there's a shortage, the value goes up. Okay. So anyways, that's still continuing. Very cool. That was discussed last night. Kiwi leading the way here. Look at the wonderful price action that we've been getting, huh? Just wonderful. Okay. Down, 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 up, up, sell. Down, 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 up, up, sell. Uh-oh, whoa, 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 whoa. But, technically it's still very bearish. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. What about next week? Up, up, sell. Which reminds me, that's a swing trade. We're doing the swing trading group today, 4 p.m. How awesome is that? I will see you today at 4 p.m. to plan all next week's trades out. I'm excited about it. I love Thursdays. Swing trading could be your career. If you have a full-time job, you have 9 children, you take care of grandma and grandpa, you work at your church, you volunteer at some community service, and you're like, I am so strapped for time, but I need Forex. I want to be a Forex trader, but I have so little time. That's exactly what swing trading is for. Swing trading is appropriate for everyone that doesn't have the ability to sit and trade every day or every hour of the day. Okay. So for example, this is a swing trade, pound dollar short. This was part of last week, and this is the target this week. So you could have been in here Sunday afternoon or a Monday morning, and you were done for the week. Now, is it always like that? No, but that is a swing trade. That's what the swing trader do. Okay? Gisa, is it a one-time payment or monthly? It's a daily payment, but we like to spread it out and just do it once per month. What does it work out to be? $3 a day? You can't handle it, right? Yeah. I don't overprice things. It's not the intent, but you got to be committed because you still have to be there. That's the thing. So in the day trading group, the day trading group also has access to swing trading, right? So in swing trading, we plan out the trade for the week, okay? But then with day trading, we're there Sunday night as the market is opening, so you could be sort of right in here. On many of these dollar trades, I was there. That's just what we do. And we've already hit targets earlier in the week, so those are all out, okay? But nonetheless, Thursdays, we meet on Thursday because we want to have our trades, our Monday trades all planned out. You have to think about that. On Thursdays, just today, we plan out next week's trades. But very often, okay, 30, 40% of the time, Monday's trades are taken on a Thursday or a Friday. The rest of the time, it's usually Sunday or Monday, Sunday night or Monday morning. Which means those traders that show up Monday, New York, and they're like, hey, so what's the plan? What are we trading? We already made all those trades. It's already done. Done. Oh, dang it. Look at that euro. Yeah. I was short that and I clicked it and I got out and now I'm doing the webinar. Oh, golly, son of a yatch. Anyways, so we can go look at euro here. The swing trade worked out really well. I was short this quite a long time ago. Okay, took profit, and now we're making the first big low of what? 20 years? Yeah, now's not the time to buy gold. What I said last week is gold could fall to like 1,600, 1,500. Okay? Remember, in a risk-off mode, you go to cash. When do you buy gold? People say, well, it's an inflation hedge, right? Makes sense. That's what everyone's been told. That's what your grandpa told you. It's a timing issue. So if we have a global contraction, because we have high inflation, you have to understand the global contraction is disinflationary. Yes, we have 9% inflation, but we're thinking 12 months in advance. So 1 year from now, we'll probably have 3.5% inflation. So we're in a disinflationary moment, and that's when gold falls. And then when gold is low and we're in a deflation mode, and the central bank steps into the market and tries to create inflation, that's when you need to think about buying gold to say, well, they're going to create inflation. To hedge that inflation, I should buy gold. And why is gold a hedge? Because it goes up and you're making money while inflation's kicking in, and indirectly you're losing money, right? So you're making money over there, but it doesn't pay you income. So it's not like you're earning 10% a year and losing 10% and it's hedged. So you got to think about it in the proper context. Yes, we have high inflation. This is when you should probably be selling gold. Okay. It's weird, right? Yeah, you always got to be in the future. Always got to be thinking future. Okay. Okay. Now, Okay. Yen is on the move. Yen is on the move. This is probably related to the Bank of Japan. One of the things we've been, right? One of the things we've been talking about a lot in both the day trading and swing trading groups is yield curve control by the Bank of Japan. And we look at it and we look, and there's a lot of action, most of it planned, but you should see the spike the Bank of Japan's been getting in yield and the immediate response of the central bank. Okay. So this is significant here. Okay. This is significant. So we got a floor here, and now we got a top. And now you got to plan what you think the future is going to be. Okay. And this is really a tough one. If I was to redo this, let's just do monthly pivots here. The real top is in here. And this is what we call a front run, by the way. Okay. That's an MM3. Okay. And then we could probably look at this. This was supposed to be the buy, but this is our current bottom. So what is the projected top for pound yen if this price action continues? Which means it goes like, okay. Now, you could just argue, oh, we'll go to the top. Let's be a little better than that. What's the target? Since this is our current bottom, what is the current target for bulls? Type in a question mark if you don't know. It's not my opinion, by the way. There's two things going on here. We're doing technical analysis, so it tells you something. And there's assumption of bullishness. Don't say daily resistance. Give me a monthly R1. Thank you, Frankie. Okay. The target is right here. 169.27. Okay. There's, again, built-in assumptions. You're a bull. So therefore, you believe it's going to go here to 169. Okay. And you're using this pivot to give you a general idea. Okay. So really, you're looking at this top, 69. It's sort of like if-then statement. If you are a bull, then that's the target. Now, of course, if you're a bear, you're going to look at this and you're going to say that a high, lower high, and there will be a lower high here. So maybe, okay? Okay? Or, as a bear, you got this as your top, then this is your target. And you have something pretty simple like this. How many people think down to 158? Let's just make it conservative. This actually, if this is your top, it's 158. 158.22. How many people believe 158.22? Okay. And for everybody else, you're looking at this. Okay. So we'll say 169. Okay. If you think something different, then you don't believe it's a trend. That will just stay in this noise from 160 to 167. Hey, it's a 700 pip noise. Okay. And it's tricky because of yield curve control. Okay, which is quantitative and qualitative monetary policy. So that's a level of complexity on these yens. CAD getting crushed, Euro's right? All that kind of stuff. Let's take a look at the today's indices. The now, CAD being brought down, pound neutral. Okay. Dollar ripper strong. Yen quite weak. Remember, it went from strong to weak. Has a lot changed? Let's take a look at sort of a macro view. Dollar's still quite strong. Yen is giving back, but you could believe it's going to get strong again. Okay. Historically, or should I say seasonally, yen is typically strong. But it's that yield curve control that's getting in there, and all of a sudden, just out of the blue, weakness. Denise says summer consolidation. I think psychologically this summer is different than most summers. One thing is Q4 of last year was horrible for a lot of professional traders. And then Q1 was all over the place. It might have been great, and then it wasn't, or it was horrible, and then it wasn't. And we really didn't get going again until Q2. And I think most traders are behind. They're behind their targets. They're behind their quotas, if you want to think about it that way. And people are like, last year's bonuses were not great. Things started fine, and then we got hit by Omicron, and it all collapsed. And then the first half was brutal, for various reasons. It went down, and then it went up when it should, and then went down, and then when it was debating, and then it went down, and then went up, all over the place. Oil went up to 122, then oil came down to 95, and holy smokes. So Denise, I think where most institutional investors are now is you don't get the summer off. Maybe you take quickie little holidays to keep your family structure intact. Nothing more expensive than divorce. But then you get back to the office and you got to make your pips. Okay? Yeah. So, I think we'll have a little more volume and volatility than a typical summer. People got to make money. Okay? Usually everything is seasonal and you make your trades, you plan things even months in advance, and you know what you want to do, and then you time it with technical analysis and you get your trades in and everybody's happy. And then by July, you're like, yeah, the Fed meeting doesn't matter. They're not going to make a big move in the middle of the summer. And, it's really slow. And you let the interns just kind of, watch grandma's pearls while you're gone. But no, now it's in many cases, depending on the type of fund and type of institution, some people are even in crisis mode. Okay, imagine being a long-only fund. Imagine being a mutual fund. Imagine being, there's all kinds of traders. Bonds you have, commodities. Again, commodities way up, commodities way down. So, maybe at the end of June, you were tickled pink as a commodities trader, and you're like, look at all the money I'm making. And then the Fed jacked up interest rates by 75 basis points. And, the whole world says, oh my God, the Fed's going to create a recession in the United States, which is a depression globally. And the whole thing collapses, and you were loving life and living large, and now you ain't in many cases. You have to assume most people are not perfect. Most people are not awesome. This is a tough gig because you just couldn't believe it. If you were up $22 a barrel, you're thinking you're going to be up $50 a barrel on oil. You built this huge portfolio, and you finally got out of the COVID crash, and everything's good, and you're happy to report it to your clients. And you just can't believe we'll be at 95 again. And then here we are. So yeah, I think it's going to be a tough summer. I think people have to work. So if you're having similar if you're having a similar year, I think everybody's having that kind of year. So don't be down on yourself. Okay. Gisa says, Wayne, do you think sitting on cash is the strongest move? It's okay. Being in cash is a position. But if you're talking about a portfolio, you're talking about a portfolio that's guaranteed to lose 9% a year right now. So, no, on the long run, no. But if you happen to be in cash, I would be looking to invest. If you just happen to be in cash all the way down with the stock market falling and stuff, I would be advising to start buying really solid companies. Let's say companies that everybody knows the name of, companies that have been around 25 years or more, companies that have real customers, have real products, have real cash flow, have real profit margins. Okay? Have dividends. And be proud of what you buy. So if you're like, man, I want to buy Netflix at 75% off. I want to buy Disney at 50% off. I want to buy Amazon at 33% off. They're probably not dumb ideas. You might not be instantly profitable, but one could assume in 10 years, okay, that would be wise. Okay. Anywho, own good stuff. Okay. All right. Commodities, let's take a look. My WTI. Somebody sold it. It's too late to apologize. It's too late. Look at that. I have a target at 90. Huh? Check that out. $300 in 5, 10, 50, 20. In 1 hour, I made 300 and something bucks. Scalping oil on a 5-minute chart. Huh? Fist bump. I'm the greatest trader in the world, right? And then 25 minutes later, you're crying in a pool of tears and snot. Richard says, Wayne, yesterday I really heard you about doing the work others won't do. Thank you, Richard. It's interesting to get up every day for 20 years knowing that 99% of people don't listen to anything you say. They just watch. Yeah. Yeah. What do you think of the entry? It's too late to apologize. It's just a 5-minute chart, yo. It's the scalp. Okay. Interesting. I did the oil trading course, lecture 2, yesterday. Did anybody like it? Hey, man, it was what? I planned them to be about 90 minutes. The first one was 94 minutes, and this one was 89 minutes. Holy smokes, huh? The weird thing about lecture 2 is that for most people, it'll turn your education upside down. And you will probably look at it going, much of what I learned in school was wrong. Now, keep in mind, it's my interpretation of history, but I think there's fairly compelling evidence that there was some relationship to what I said in reality. But for example, the one I pick on quite a bit, and I always have, so it's nothing new, but this idea that World War I happened because Archduke Ferdinand was assassinated in Sarajevo, so the entire world went to war. That's what you were taught in school, and it's so silly. Oh my God, really? Dude, that guy must have been popular, huh? Oh my God, you killed the Duke! World War! You're like, uh-huh. Great. Sure. Take a look at gold. Okay. Now gold is at an interesting price. We're at 17. The next one is down here at 15. Are we ready to go that far? You know what? I don't know. But like I said, in a risk-off world, what do? You sell everything, right? Because you need the cash. So you're sitting on gold and you're like, I'm going to sell some gold. Okay? Because it's deflation. Okay? So anyways, this is an interesting price. Selling now is just, well, what did you guys learn yesterday, if anything? I said, what kind of bear sells at support? A bear that's broke. Okay? Right? What are all the awesome cars that VW makes? VW, Audi, okay, Porsche, Lambo. Okay? Your trading puts you somewhere on this spectrum. If you want to turn in your VW and buy a Lambo, you certainly don't sell at support after it's fallen. Who's driving the Lambo now? Somebody here, somebody here, somebody here. They did the research. They made the decision. They waited, lower, high, sell. Okay? Waited, lower, high, sell. Waited, sell. That's a VW move. Huh? That's an old VW. Now you might say, oh, but Wayne, my Golf has more torque than a Gallardo. I gotcha. But still. And by the way, Gallardos are not Lambos. All right. Oh, oil's still falling. Got 400 now. Cool. Give me my $400. Lovely, tell you, Mom. $400. That's all right, because I waited 12 hours for a Bitcoin transaction to take place earlier this week. 12 hours for the block to be confirmed. 12 hours. I've never seen anything like it. And it gave me huge concerns about the ability to clear these transactions. And it occurred to me there's probably not enough miners because prices are falling. And now energy prices are way high. So there's miners sitting around. They're like, I bought a $10,000 ASIC machine. It cost me, I don't know, I'll make up. It cost me $300 a day in energy. And I make $27 mining. And they're like, you know what? I'm out. And all of a sudden, holy crap. So I lost like $750 waiting. I had the Bitcoin, but it has to be confirmed on the blockchain. It has to be confirmed. And it's sitting there. Finally, it took almost exactly 12 hours. I'm not joking. From 1 o'clock in the afternoon to 1 o'clock in the morning. It cost me, I lost $750. So anyways, $400 in an hour is a good oil scalp. Now, it's one of the reasons why I'm teaching an oil trading course, by the way. And at the end of the oil trading course, I've only done 3 hours of lecture. We have many, many more hours of lecture to go. But the last lecture is how to trade using technical analysis, the time and how to trade it and when to trade it, like I just did here. And then we're going to spend days and days and days and days, 15 days, setting these trades up together live. That mini lot paid $400. It's $250 to join the course. I mean, come on. Come on, dude, sign up. In fact, why don't I give you the link? Hang on, let me find it. And you're like, this is a sales pitch. Of course it's a sales pitch. Gee whiz. Everybody gets so upset. I think you need to know this. I'm enjoying it. The next lecture begins. Oh, I got to update that because we did the last lecture. So we just did this one. And this is what I'm going to teach you next. I'm going to teach you how to drill for oil. Huh? Yeah. But I'm actually kind of squeezing one in here before that. So I'm actually kind of adding a lecture here so that I can teach you geology. Not just what oil and natural gas and even coal, what it is, but where does it form? Like, where do you even look for this stuff? On top of a mountain? So anyways, did I just kill it again? I just killed it, right? Hang on, I didn't even... Oops. There we go. Sorry, I forgot to give you the link. Sign up. Sign up. You can watch the first 2 recordings right now. Take you 3 hours. 16 weeks. Yeah, I can't. I can see how I can add to this course, but I can't really see how I can remove from the course. But I might be able to combine a couple of them. Maybe I can do supply and demand in one, or even supply, demand, and seasonality into one. But I do believe you need to know, okay? So I was going to call this a year in the life of an oil trader and a day in the life of an oil trader. But anyways. Yep, that's a sales pitch. It's going to cost you $250. I know, right? It's not bad for probably 30 hours of work. Yes, Gisa. Okay, anywho, I was very worried about Bitcoin. And if we breach below this 1850, I mean, dude, all I can say is, dude, we might be facing 10K. I'm not saying we will, but if we get below this, what the chart says, okay, and we knew this going back into June, after this fall. The plan in June was to sell around 23 and target 10,000. And it's just hard to believe. It's just hard to believe. But that's what it says. That's what it says. I I don't make this stuff up. Oh, look at that. Oil just jumped a dollar. I just saved $100. I just saved 25% of my profit by getting out. Why did I get out, by the way? At 90.5, I was looking at Brent. I'm like, oh, that's an out. So I got out there. Cool. Is that right, Peter? That's interesting. What is it right now? It's like 30 cents or something, huh? All right, so I think that's that. I think exotics are probably getting crushed. Yup. Emerging markets are in trouble with this dollar. If we go into a global recession and the dollar remains strong, it's really going to hurt. Okay. What kind of fundamentals go into cryptocurrency? I use macroeconomics. Okay. 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 Look at the bounce. Oh my God. Now it's over 92. Just saved $150. Cool. What indicators are you running? Well, first of all, just join FX Bootcamp or watch all the free videos. In the description below, the one that says free Forex training course, it goes all over these things. The next thing I can tell everybody is that I'm adding all the indicator downloads and installers to FX Bootcamp, so it'll be part of FX Bootcamp now. You might actually see it in the site. I wouldn't click anything quite yet because I don't know if it's ready, but we are in that process, and hopefully it'll be done in a day or two. So I'll leave it at that. What a wonderful day. Oh, no, wait. Let's do one more. Let's do the S&P 500. It's too late to apologize. It's too late because I'm hedging the S&P 500 right now, which is a fancy way of saying I'm long and I'm short. And I started that up in here, and I'm leveraged short. Okay, so I have I invested money into an S&P 500 short fund, ultra short fund, 3x. So I'm leveraged short as a hedge. Cool. Okay. And I threw the hedge during a period of rally because that's what you're supposed to do. If I back out now, we can see that if we breach this, the next line in the sand is down here at 37, 36 and some change. And after that, there's more pain. And when this is falling, I typically, If you look at year after year after year after year after year after year, and I've been doing this for over 20 years apparently, because I remember the last time we were at euro dollar parity, and that was 2002, and I was already trading. I was still a venture capitalist, but I was still trading at home. Actually, you know what? No. I remember being at home, and it was the middle of the day. Maybe that's when I don't know. I can't remember. Anyways, when this is falling, I'm typically buying US dollar. I'm typically buying Swiss franc. I'm typically buying Japanese yen. And that doesn't mean I just do it blindly, but I go to those pairs, letting the S&P 500 as an example represent my risk on, risk off mode. And then I will drop into, like, let's say a yen. I'll pick a yen pair because I know they're not perfect right now. And I say, okay, I want to buy yen, but in this context, no, probably not. So I might do something like, maybe my future trade looks like this. Okay. So that's tomorrow's trade. Because I don't buy it, I don't sell at support, I sell at resistance. So it's fairly easy. Once you've made a decision, you have to just say, what do I consider resistance? And that's a fancy way of saying something pretty simple. At what price would I like to sell? Okay? At what price would I like to sell? And then I wait. And that's what it's all about. Because on this side of the chart, you have price. Oops, let's do it this way. On this side of the chart, you have price. On this part of the chart, you have time. So there's only two questions that technical analysis addresses. At what price would I like to sell? Because I can't sell now. That'd be stupid. And at what time? Well, I don't know the time, but I do know the price now. So maybe around, you hear the language? Maybe around 93.50, I would like to sell this. See, I'm a boss. I'm in boss mode. So if it goes up there, then I have to figure out the time. When do I actually pull the trigger? And that's when I move from like a 30-minute chart to a 5-minute chart, and I witness a rollover, and I get short. But I made all the hard decisions well in advance. That's how I typically do it. Now, we're being hit, or were hit, with yield curve control. Now we're back. And so, yeah, so that might be tomorrow's trade plan. And that might be next week's trade plan. I might be targeting down here. Why not? Okay? So therefore, therefore, on a 5-minute chart, I can take a little scalp and target 300 pips profit. And then you're like, that's a hell of a scalp. Yeah, I'm only entering on a scalp, but I made bigger decisions, both fundamentally and technically. And that's what we do. So I invite you to join FX Bootcamp for $88 a year. I invite you to join the oil trading course. It's $250, one-time fee. I invite you to become a client of TradersWay.com. There's lots of resources for you to get help. Okay? Okay? Simple enough. Do you open more than one position at one time? Sure. Did I do that today? Yeah. Do I do it a lot? No. Okay. Now, if you mean like building portfolios, yes. If you're like swing trading, well, this week I sold. Does anyone remember? I think on Monday morning I had 10 open trades, of which 10 were profitable. And then I got out of probably 5 of them. And then I re-entered those trades, probably half of those trades. So then I was in about 6 trades, of which I took profit on those. And of which then today I just got out of that oil trade. I was short euro dollar and I screwed up. Right at the same time I shorted oil, I shorted euro dollar. And then I had all these problems getting the live stream going, and I clicked the wrong button. I missed that trade. And then what's left? What's left are these 2 trades from the 11th. So that was Sunday. I think that was Sunday, right? It's too late to Monday night, Monday morning. Like 2 positions on one pair, like a scalp, and then a swing. Oh, yeah, sure. That's the whole point of day trading, by the way, is compounding. Okay. Interesting, right? No, it doesn't, Giza. $88 is for 65 hours of training. If you want to upgrade your account to join the swing trading group, that's $99 a month. Okay? You got to be a member of the community before you can join any of the live stuff. Okay? Cool. Well, how about that? How much percentage a week can a trader make? 1,000? Negative 1,000? It's not the right question. You're asking right off the bat, you're asking the wrong question. Yeah. Okay. What value can you create? And at what level of consistency? Okay. The right question would be, how long can you trade consistently? Okay. How much are you willing to risk? So I teach ultra conservative trading. Ultra conservative. So if you want to make a lot of money, don't join FX Bootcamp. There's some kid on YouTube that will get you excited about making a lot of money. I'm not that kid. So anyways, I'll leave you guys. I hope you have a wonderful day. Again, I will see everybody in the swing trading group and day trading group today at 4 p.m. to set up all the trades for next week. Thank you for being part of the community. Peace on earth. May the pips be with you. May your profits be above average.